welcome to the channel JAIIB and CAIIB Made Simple. If you are preparing for AML KYC certification course and if you are looking for memory based question which appear on the 23rd August examination, then you are at the right place, because in this particular video we are going to discuss all the important questions memory based which were asked in the examination along with the detailed explanation. So the examination help in the 3 shifts. So we have question available for all the shifts which are memory based. So I request you to please try the question first on your own, see your understanding, and then listen to this to the answer and explanation. I will explain each and every option. So let's get started with our first question that we had. So basically question is, when opening an account for a trust, which of the following is not one of the required certified documents or equivalent e-documents to be obtained by the reporting entity? Option A, registration certificate of the trust. So remember, which of the following is not? This is the keyword. Right, let me highlight it. So option A, registration certificate for the trust. Option B, trust deed. Option C, PAN or Form 60. And option D, memorandum or accession of trust. So let's look at each and every option. First of all, option A. What about the registration certificate of the trust? Do you think that it is required? What do you think about it? Yes, this is required. It is required. Why? Because this certificate proves that trust is legally registered. Because this particular certificate proves that trust is legally registered. That's right. Yes, registration certificate of the trust is required. Yes, because this proves that trust is legally registered. Without it, the bank cannot confirm the legal existence of the trust. What about the trust deed? Yes, I think trust deed is also mandatory. Just like an individual, a trust also needs a tax identity, right? So that is the point. So basically, trust deed is like the constitution of the trust. So you can think of the constitution of the trust. It explains why the trust was formed, right? What power, who the trustee are, what power they have. Bank need this to know how the trust will operate. The third is PAN and Form 60 of the trust. Yes, this is also required, right? Just like individual, a trust also need a tax identity. So either a PAN card or Form 60, if PAN is not available, it must be submitted. What about option D? A memorandum and accession of trust. This is not required, right? So remember, MOA and AOA, these things are not required to the context of trust, because memorandum of association or MOA is for companies and societies. So they are mandatory for companies. They are mandatory for societies, right? Not for trust. That's why it is not required for opening a trust. So the correct answer is option number D. Yes, this is the correct answer. So what we have learned: for trust account, bank need registration certificate, trust deed, PAN and Form 60 and detail of the trustee. MOA is for company, not for trust. So that is the point. Now friends, let's look at the next question. The next question that we have is related to the designated director. Very important one. Let's understand it. So we are going to crack an important MCQs under the designated director. So which of the following statement correctly describe the role and eligibility of a designated director under PMLA, PMLR and the regulatory guidelines? Option A, a designated director must always be the chairman of the company regardless of the structure and is only responsible for ensuring the audit compliance. Option B, a designated director may be the MD, may be MP, may be managing trustee or a senior management individual and is responsible for overall compliance including the KYC system. Option C, designated director is a junior compliance officer who files suspicious transaction report and does not need to be formally authorized by the board. And option D, any employee of the bank can be nominated as a designated director provided they have the knowledge of the customer service and branch operation. What do you think? Let's go through each and every option. First of all, let's start with option number A. What do you think about option number A? So option number A says that DD must always be the chairman. This is wrong. DD is not always the chairman. It depends on the types of organization, right? And it says that it ensures, option A says that he must be chairman. No. DD rule is much wider than just audit. It's all about full compliance with PMLA, KYC, AML system. Let's look at option number B. Option number B is correct. Yes, this is the correct one. Why it is correct? Because managing director in a company, right? Managing director in a company, managing partner in a partnership firm, proprietor in a proprietorship, and managing trustee in a trust, right? Or senior management individual in cooperative bank and RRB. So and the responsibilities, they ensure compliance with the law, right? They ensure overall compliance. They ensure updating KYC, staff training, take measures against money laundering, and terror financing risk. What about option C? Option C says that DD is a junior compliance officer filing STR. That is not true. That is wrong. Because filing STR is usually the job of PO. Remember, suspicious transaction report is to be filed by the PO. Who is PO? PO is called the principal officer, not the designated director job. So DD has a higher role, right? DD has to ensure the accountability at the top, right? So filing, this filing has to be done by the, PO. PO means, you know what is the meaning of PO? PO means principal officer. Now what about option D? It says any employee. This is wrong again. It has to be someone at the top management level. It says any employee. It is wrong. It has to be someone at the top management level, right? Not just any staff who know the customer service. So what we learned from this discussion is that, that designated director, remember this DD, he is the top level person. He is the top level person who is responsible for PMLA and KYC compliance. And position depends on structure. So you can see position may be MD. You can see MD, MP, right? Proprietor, MT, anything. Responsibility includes KYC system, staff training, policy update, and AML measure. And DD is not principal officer. Remember, DD is separate than the principal officer. Those two are separate. DD is not principal officer. DD is accountable at the top. PO is more operational. Now friends, let's look at the next MCQ that we have. So friends, before proceeding to the next MCQ, let me tell you, if you want any kind of study material for the AML KYC in the form of unit-wise theory, which is made from the Macmillan book, or if you want unit-wise MCQs, which consists of 50 MCQs, average 50 MCQs per unit, almost 2000 plus MCQs in the entire syllabus. If you want previous year memory-based question like this, you can enroll in our course of AML KYC, which is available at reasonable rate. For more detail, you can WhatsApp me on this particular number, right? You can WhatsApp me on this particular number for more detail. In the description section of the video, you will also get the course link. Now friends, let's look at the next question. This question pertains to the primary function of FIU-IND. So we will solve a very important MCQs on FIU-IND. Which of the following is the primary function of FIU-IND under the PMLA, right? So question is asking you to find the primary function of FIU-IND under the PMLA. Options are regulating monetary policy and setting benchmark interest rate. Option B, collecting, analyzing, disseminating information on suspicious financial transaction. Option C, issuing banking license and supervising the credit policy of the bank. Option D, managing foreign exchange reserve of the country. Let's go through option by option. First of all, option A. See, this is actually the job of RBI, right? Monetary policy monitoring, job of the RBI. For example, RBI decide repo rate, reverse repo rate to control inflation and liquidity. Second is collecting, analyzing, disseminating information. Yes, this is exactly what FIU-IND does. Imagine a bank notice that a customer deposit 10 lakh rupees. Bank notice that customer has deposited 10 lakh cash every day without any clear source. Customer is depositing 10 lakh cash every day without any clear source. So the bank report it as an STR, that is called suspicious financial transaction report, right? FIU-IND then collect it, analyze the pattern and share the intelligence with the enforcement agency like ED, CBI or income tax department. Option C say issuing banking license and supervising the credit policy of the bank. Again, this is the role of RBI, right? RBI give license to the new bank and decide how much credit flow should be regulated. FIU-IND does not guarantee license. What about the next last part, managing foreign exchange reserve? So this is also the job of RBI, right? Foreign exchange reserve managing is the job of RBI. RBI manages forex reserve to keep the rupee stable. FIU-IND is not involved here. So what we learned from this discussion is that, whenever you see this word FIU-IND, just remember, this is called Financial Intelligence Unit India. It was formed in the year 2004. It worked under the Department of Revenue. Right, Ministry of Finance. And its role is to collect, analyze and disseminate information on suspicious financial transaction. Report it handle like CTR, like STR, right, NTR, CBWTR. Now friends, let's look at the next question. The next question is, as per the section 4 of the PMLA, what is the prescribed punishment for committing the offense of money laundering? So let's see the option that we have. These are the 4 options that we have, right? So basically the first option says simple imprisonment of not less than 1 year, but which may extend to 3 years with fine. Option B say rigorous imprisonment of not less than 3 years, but which may extend to 7 years and also liable to fine. Option C say rigorous imprisonment of not less than 5 years, which may extend to 10 years with fine. And option D say simple imprisonment of not less than 2 years, which may extend to 7 years with no fine. So these are the 4 options that we have. So let's see the answer. Let's see the option by option. Option number A, simple imprisonment of not less than 1 year. See, this is wrong. Option number A is wrong. Why it is wrong? Because this is incorrect. Because the punishment under PMLA is not simple imprisonment. It is a rigorous imprisonment. So remember, if you do any punishment under PMLA, it is just a rigorous, right? It is rigorous imprisonment. It is not simple imprisonment. Rigorous means tough jail time with hard labor, not just sitting in the prison. Right? What about option B? Option B say rigorous imprisonment with not less than 3 years, but which may extend to 7 years. Yes, correct. This is the correct one. This matches the section 4 exactly. Minimum punishment 3 years, maximum punishment 7 years, and yes, fine is also applicable. Option C say rigorous imprisonment of 5 to 10 years with fine. This look attractive because sometimes people remember 10 years, right? But that is a special case, only for certain offense like narcotic case under the NDPS Act. So this is only for narcotic case under the NDPS Act. Right. In general case, it is 3 to 7 years. And option D say simple imprisonment of not less than 2 years, which may extend to 7 years with no fine. Again wrong, because the imprisonment is rigorous, not simple, and the fine is definitely applicable under PMLA. So what we have just discussed, let me just summarize. I told you we have talked about the section 4 of the PMLA, right? So this section 4 of the PMLA, it talks about punishment for the offense of money laundering. Normal rule is rigorous punishment, rigorous imprisonment 3 to 7 years plus fine, right? So 3 to 7 year rigorous imprisonment plus also fine is applicable. Okay, for some serious offense like narcotic, narcotic under NDPS, the punishment can go up to 10 years, but the general is 3 to 7 years. In a special case, it can go up to 10 years. Now friends, let's talk about the one question on which of the following correctly explain the social and political effect of the money laundering. Very good question. Basically, option is which of the following correctly explain the social and political effect of the money laundering in a jurisdiction where it is not effectively controlled. Option A, it results only in the loss of government revenue but has no impact on crime or politics. B, it increases corruption and organized crime. It creates safe haven for criminals, affecting the social environment. Option C, it primarily weakens the banking sector but leaves society and governance sector largely unaffected. It strengthens the democracy by bringing illicit fund into the circulation and boosting the political funding. Very good question. Which of the following correctly explain the political effect? So option number A, if you look at the option number A, which says that it only cause revenue loss, nothing else. What do you think about it? This is incorrect. Why? Because the effects are much deeper than the tax revenue. It only talked about the tax revenue, but the effects are much deeper. Right? Money laundering spread corruption, strengthen criminal, weaken governance. Yes, that is what it does. So that's why option number A is wrong. It just talks about loss in government revenue. No. What about option B? Yes, option B is the correct one. Why option B is the correct one? Because money laundering is when money laundering is unchecked, corruption grow because corrupt officials hide their wealth. Corruption will grow. Right? Why? Because corrupt officials will hide their wealth. Organized crime will increase. Right? And such country becomes safe haven for criminal. They become safe haven for criminal. And the worst part is that over time, these criminals start influencing politics, weakening institutions, and even threatening the democracy. Right? So these are the things. Influence and even undermine the social, political, and democratic system. What about option C? Option C say it mainly weaken bank, but society and politics remain safe. See, this is not correct. Banking weakness is one effect. Right? Banking weakness is one effect. But the bigger danger is corruption. Right? The bigger danger is corruption, social damage, and political influence. What about option D? Option D say it strengthens the democracy by boosting the political funding. See, that is completely wrong. Illicit fund does not strengthen democracy. They undermine it. Illicit fund. Illicit fund, what it does? It basically undermines the democracy. Right? Because dirty money buy power and control. So let's quickly summarize the key point. Yes, we talked about the social effect. See, it has both social effect as well as the political effect. How is the social effect? Yes, social effect is that more corruption more organized crime. First of all, corruption is a kind of social effect. Second example I can give you is organized crime. Organized crime also happen, and it is a safe haven for criminal. Second is political effect. If you look at the political effect of it, so criminal gain influence, criminal gain influence, it weaken our institutions become weak and can even erode the democracy. So money laundering is not just a financial crime, it is a threat to society, politics and national security. I hope it is clear. Now the next question that was asked, that as per the given information, how many member does the Egmont group of FIU currently have? This question is most frequently asked. Egmont group is the most frequently asked question. I request you to please learn it wholeheartedly. Egmont group. Right. Options are 101 member, 121 member, 151 member, and 181 member. So basically, how many members are there? Do you know? The correct answer to this question is 151 member. So the Egmont group is an international network of financial intelligence unit established to strengthen the cooperation in the fighting money laundering and terrorist financing. Right. So its objective includes from bank make up the membership of Wolfsberg group. And so basically, this was the question which was asked in the examination. Options are 10, 13, 15 and 20. Let's understand each option carefully. First of all, option A. Option A say 10 global bank. So this option look close, but it is not correct. The group is slightly bigger, not 10. What is the option B? Option B says 13 global bank. So this is the correct answer. The Wolfsberg group is made up of 13 leading global banks formed in the year 2000. It was formed in the year 2000. There are 13 global banks, right? They came together to fight the financial crime like money laundering and terror financing. So like money laundering and terror financing. Okay. So 13 leading global bank. What about option C? 15 global bank. Again sound possible, but the number is not 15. Some examiner put nearby number to confuse us. What about option D? It says 20 global bank. See, basically definitely too high. The Wolfsberg group is exclusive, not such a large membership body. So you can think of the Wolfsberg group like the Avenger of the banking world. 13 powerful global banks united to protect the financial system from criminal. So let's quickly summarize the key point. What we have discussed, it is an association of the 13 leading global banks. First point, it was formed in the year 2000. It focuses on anti-money laundering and KYC and terror financing, CFT, countering the financing of terrorism. Right. So whenever you see this in exam, remember 13 bank fight financial crime together. Okay. Now let's look at the next one. This question is regarding the UCIC. So friends, today we are discussing a very important question related to UCIC, which is Unique Customer Identification Code. So which of the following correctly explain the provision regarding the UCIC as prescribed for bank and NBFC? Options are UCIC must be allotted only to the new customer opening account in the bank while existing customer are exempted. Option B, it is mandatory for both new and existing customer but not required for walk-in and occasional customer. Right. So for both new and existing customer but not required for walk-in or occasional customer such as purchaser of prepaid instrument. Option C say UCIC is optional for all customer and bank NBFC may decide whether to issue it depending on their internal policy. And option D say that UCIC can only be issued to corporate customer, not individual, since it is linked to business entity identification. So let's understand each option one by one. First of all, option number A. What do you think about option A? This is wrong. Why? Because RBI say UCIC has to be given to both new and the existing customer. What RBI say? That UCIC must be allotted to both the new customer as well as the original customer, existing customer. Okay, as well as the existing customer. Existing customer also need to be covered over the time so that same customer can be uniquely identified across all product and services. So that's why option number A is wrong. What about B? B says that it is mandatory for both new and existing customer. Yes, very good. It is correct one. This is correct because regular customer must always have UCIC. But for one-time customer, which we call walk-in occasional customer, we can also call them one-time customer. Okay. So for one-time customer or walk-in or occasional customer, like someone buying a prepaid card or one-off product, UCIC may not be issued immediately. However, if that customer keep coming back, then UCIC become mandatory. Imagine someone buys a prepaid gift card once. No UCIC is required, right? Someone who is buying a prepaid gift card once, in that case, no UCIC. But if that same person keep coming every week to buy multiple products, the bank will assign them a UCIC to track transaction properly. Okay, so that is the point. Now, what about option C? Option C says UCIC is optional for all customer and bank NBFC. No, this is completely wrong. Because UCIC is mandatory as per RBI. What about option D? It can only be issued to corporate customer, not individual. Again, it is wrong. UCIC is for all type of customer, individual, corporate. The whole idea is to uniquely tag every customer in the system. So remember what we have discussed just now. Remember the full form. Unique customer identification code. It is mandatory for all the regular customer and not required for walk-in or occasional customer. Purpose is better customer data management, risk profiling and monitoring suspicious data. Now one question which was asked based on UAPA. Let's have a look. So the question is, which of the following correctly describe the key feature of the Unlawful Activities Act or UAPA as amended? So these are the options that we have. So option number A says that UAPA enacted in 1967 focuses only on unlawful political association and has no provision relating to terrorism or financing of terrorism. Option B say UAPA amended in 2008 incorporated measures to combat financing of terrorism in line with UN Security Council resolution. Option C say UAPA amended in 2013 was diluted to reduce its scope and exclude property seizure connected with terrorist organization. Option D say UAPA only applied domestically and has no connection to international obligation such as FATF standards. So what do you think is, which of the option do you think is correct? So option number A. Option number A says that UAPA was only about political association and nothing to do with terrorism. What do you think about it? This is wrong. Option A is wrong. Why? Basically UAPA started in 1967. This is correct. Yes, it was enacted in the year 1967. This is correct. Right. Basically it was enacted mainly to deal with unlawful political association. The full form itself say unlawful. What is the full form? Right. Unlawful Activities Act. So it was enacted in 1967 to deal with unlawful political association, but later it was expanded. After the 2008 amendment, terrorism and terrorist financing become a major part of the act. So two things, right? Let me write it down. So two things become the major part. The first thing is, terrorism, right? Terrorism. And the second point is terror financing. These two become the part and parcel of the act. So that's why option number A is wrong. It focuses only on the unlawful political action. This is wrong. It has to do with terrorism also. What about option B? It says that it was amended in 2008, incorporated measure to combat financing of terrorism. Yes, this is the correct one. Right. So this is absolutely correct. If someone raises fund in India to support a terrorist group abroad, right. Also, if a property like house or land is linked to terrorism, the government can freeze or seize it. What about option C? It says that 2013 amendment diluted the law and reduced its scope. See, this is completely wrong. This is wrong. Why? Because the 2013 amendment actually made the act stronger. The amendment which happened in 2013, it made the act stronger. Right. It made the act stronger, bringing in line with FATF standard. It bring in line with the FATF standard. FATF, Financial Action Task Force, to fight money laundering and terrorist financing. It was not diluted. It was tightened. Right. It is saying that it was diluted to reduce its scope. No. It was not diluted. Rather, it become more tight. What about option D? It says that UAPA apply only inside India and has no international link. This is completely wrong. Why? Because UAPA amendment were specifically made to align with the international obligation, international obligation UN Security Council resolution, and FATF recommendation. So let's quickly summarize the key point. What I have told you, that UAPA is a law to curb unlawful activities and terrorism. Right, remember, it is a law to curb unlawful activities and terrorism. 1967, it was originally an original act, right? And 2008 amendment was there, which included terrorism and terror financing in line with the UN resolution. 2013, it was amended, right? When it was amended in the year 2013. 2013, it was amended, right? Which further strengthened the law to meet the FATF standard, right? I hope it is clear. Now, let's see the last question of today's session. The last question is, as per KYC norm, what is the time limit for submission of an officially valid document by low-risk customer who are unable to provide it immediately but need to open a bank account without interrupting business? Right, this is the question. Option A, it must be submitted within 3 months from the commencing the relationship. It must be submitted within 6 months from commencing the relationship. it is not required at all for low risk customer once the relationship is established. And D say it can be delayed indefinitely subject to the bank approval. So which option do you think is correct? So let's look at option number A. It says within 3 months. What do you think about 3 months? No, this is incorrect. It looked tempting because 3 months is a common timeline in some compliance area, but the rule is not 3 months. What about 6 months? The rule is that if the customer is of low risk, right, like a salaried person opening a saving account, or someone with a small bank balance account, so the bank can open the account immediately, right? But the customer must submit their OVD within the 6-month timeline. For example, take the case of Ramesh. Let's understand it with one example. Take the case of Ramesh. Now Ramesh, right, is a salaried employee. He wants to open a bank account, but he has misplaced his Aadhaar card. So the bank can open his account today, but Ramesh must give Aadhaar card or another OVD within 6 months. So remember the 6-month timeline is there. So let me highlight the keyword 6 months. Right. What about not required at all? Option number C, this is wrong. Option number C is wrong because it said not required at all. C, KYC is mandatory for all customer. Even low risk customer must eventually provide OVD. What about D? It can be delayed indefinitely. There is no such thing like indefinite relaxation. The maximum time limit is 6 months. And after that, if documents are still not provided, the bank must freeze or restrict operation. So what we have discussed just now, let me summarize. I told you that bank can open account immediately for low risk customer even without OVD. But OVD must be submitted within 6 months. After 6 months, if OVD is not given, the bank must take regulatory action. Correct answer is option B. Friends, we have more questions available with us, and that is memory based. If you want me to bring the part 2 lecture of this video, please write yes in the chat box. I will provide you the part 2 video. And if you really think that this video was knowledge worthy and help you in understanding the concept, please like the video. And if you want any kind of study material for